Good morning. Today is Thursday, October the 19th. The time right now is 8:22 in the morning. Overnight, we can see some big move in equity markets. We can see the US equity basically come off in a big way. We can see Dow Jones Cash Index actually is currently trading at 33,665 from a high of 34,147.6 that we saw just 24 hours ago. So because this is in reaction to the rising yield, which has hit a 16 years highs in the US Treasury. So this is actually acting as a wet blanket in the rebound in equity markets. So for the time being, let's see what happens. The market low so far this week is at 33,455. If this level is taken out, there's a good chance the market may see lower prices going forward. In the S&P 500, in the cash index, we also see a sharp pullback from the high of 4,393.57. Was at one point, it looks like the market is going to take out, it's definitely going to surge higher beyond the high that we see overnight. And target was originally set at 4,421. But however, the surging yield is causing market players to actually consider that this is going to be bad for equity markets. So in the short term, we can see that there's a possibility the S&P 500 may go back and test the 4,200 levels. So this is something that we have to watch. If that's the case, then the low that we saw last week will effectively be broken, and this will accelerate to the downside. Okay, and over the Nasdaq 100, we see similar move, although the drop wasn't as deep. And we can see that the Nasdaq 100 is currently trading just above the 14,900 levels from a high of 15,333 that we saw just on Thursday itself. So we can see this is what we are seeing. Market now is definitely reacting to the downside. So this, we are trading at a week's low for the Nasdaq 100. So this could actually see the market accelerating to the downside to retest the 14,432 that we saw last week. Okay, last month, not last week. Okay, so this is the stage in which we are operating. The downside potential is still very much alive. And over in the Hang Seng itself, you can see Hang Seng index is pedaling back to the downside, accelerating to the move from the fall from 18,392. So this could actually see this Hang Seng market challenging the 17,133 levels over time. And over the Nikkei 225, you can see Nikkei is also reacting to the downside. We see the market actually broke below the most recent low at 31,560, and this is definitely putting the condition for a re-challenge of this level at 31,150 to as low as 30,950. So the move back to 31,000 is very much alive, and because the market has just recently taken out a swing low here, and this is a breaking out of character, and the market may actually be seeing lower prices going forward. And over in the dollar itself, consider the dollar is very much in demand after reports that a hospital was bombed in Gaza and about 500 people has perished, and both sides were trading accusation as to who did it. And this is actually causing market players to actually see this as a rise in tension, and definitely they are flowing into the safe haven demand for dollar. And if this is the case, there's a good chance of 107.05 that we saw in October at the beginning of this month may actually be challenged one more time. Okay, and over in the euro, because the dollar is resurging, obviously principal currencies are all back pedaling at this moment as we are speaking. And if this market take out the 104.95 levels, it will actually go lower to test the 104 levels one more time. Okay, and in the Sterling is definitely treading water. The market has not taken up most recent low, which is currently at 121.22. And if it does breaks, and it looks like it may break, and then a challenge, and even maybe a dip below 120.37 may also be a possibility. Over the Aussie was actually doing well, but yesterday we see the move back to 0.6393 on the back of surprisingly strong numbers coming in from China, and Australian dollars obviously will benefit from a healthier economic performance by China because their economies are actually very deeply intertwined. But however, the surge in the dollar causing the Aussie to come back down again, and at this moment in time that it is currently trading at 0.6325, and there's a very good chance the market will test these two levels. Currently, there is a double bottom here, okay, at 0.6285 levels. And if the market can hold, that will be great for a rebound, okay? But however, if the market do take out this level convincingly, then the market will actually be lowering. I have to lower the expectation for a move down to 0.62, okay? Dollar yen remains very much in demand. Like I say, other than the fear of intervention by Japanese authority, this currency pair should actually be trading a lot higher, because the yield in the US Treasury is a 16 years high. That means the interest rate differential between Japan and US is tearing apart, favoring dollar. So this is the background in which we are operating. So not sure whether the Japanese will come in to intervene, because this is the only thing capping the dollar yen rate from surging higher. So do watch out for any kind of unusual movements in the dollar yen rate. Over in dollar Canadian, you can see the demand for dollar is causing dollar Canadian to actually rise, and there's a good prospect the market will actually challenge 137.35 to 137.65 levels. We are in this red color area in which are highlighted. Whether it will break the 137.85 remains to be seen. So I think for time being, this we have to lower our expectation to around 137.35 to 137.65. And over in crude oil, we can see crude oil prices remains stable, although there was a brief moment in which prices went up to $88.57 on the back of a EIA report that suggests this inventory has actually dipped. Okay, so this is actually conducive for oil prices. So obviously on the back of the rising tension in the Middle East, this is also something that will also support oil prices going forward. There's a very good chance the $90.27 that we see high here at the beginning of the month may actually be taken out. And if there's a case, there's a good case that the crude oil may actually go back up to $90 and beyond. Over in the gold market, obviously gold has benefited tremendously as a result of the rising tension in the Middle East. Prices of gold traded to a high of $1,962.60 after dipping momentarily to $1,907. So it looks like the market has already taken out these two highs that we saw in September. So right now the prices that can actually go from going higher technically is two layers. They are stacked very closely above each other. One level is $1,973 to $1,982. The other one is $1,985 to $1,993. So both these two are acting as immediate resistance. So if you are going to buy, make sure that you understand that right ahead there are two strong barriers, potentially with the ability to cap the market. Okay, silver actually pulled back overnight after hitting an overnight high of $23.32, which actually is a three-wave equality level. Previously I did mention this level is at $23.31. So if market do break this level, or rather touch this level by 1 cent, and before it come back down. But currently on the downside, the market is also supported by one layer of support. Okay, possibly at $22.58 to $22.77. So either way, I would rather stay long precious metal rather than go against it. So in the meantime, this is all I have for you. And now before that, okay, I missed out one thing. I'll talk about Bitcoin. Bitcoin has been very stable after the false news that caused Bitcoin prices to go up to 30,000, and now it's currently back to 28,400 levels. Of course, this piece of fake news was on the back of some kind of approval for a spot BTC ETF license granted by the SEC to iShare, which is part of BlackRock. Okay, this was actually denied and the price come back down. But by and large, technically speaking, I do favor higher prices in digital asset prices, whether it is in Bitcoin or whether it's in Ethereum. I do think that structurally speaking, the market seems to be in favor of another run up in prices. So do watch out for all this development. In the meantime, this is all I have for you. Take care, and I'll come back to you tomorrow with another update. Bye-bye.